Stop scrolling right now, seriously, don't move. Because what I am about to show you might be the biggest penny stock comeback story heading into 2026. We're talking about a stock that has been absolutely destroyed, down 65% from its highs. But here's where things get insane. This company just quietly landed a deal with Home Depot. They're sitting on $11.2 million in cash, with zero debt revenue, exploded 77% year over year, and a major Wall Street firm just slapped a $10 price target on it. That's a potential 376% gain from where it's trading right now around $2.10. This is one of those moments where smart money starts buying while retail investors panic. The ticker is SNES. And by the end of this video, you'll understand exactly why this could be one of the biggest comeback stories of 2026. So what does SenesTech actually do? And why is Wall Street suddenly obsessed with it? The answer is crazy. SenesTech is literally revolutionizing the $20 billion pest control industry. But they're not poisoning rats. They're not trapping rats. They're giving rats birth control. That I know it sounds insane, but this is pure genius. Their flagship products, Evolve Rat and Evolve Mouse, are the world's first and only EPA-approved fertility control baits for rodents. Instead of poisoning rats and creating a chain reaction that kills owls, hawks, pets, and wildlife, SenesTech simply reduces reproduction. It's humane. It's non-toxic. And cities are desperate for a solution like this. New York City alone spends millions every year fighting rats. Traditional poison causes dead animals everywhere, public outrage, and environmental damage. But fertility control? That's something politicians and city councils can actually get behind. And here's the twist. SenesTech has zero direct competition. Nobody else has EPA approval. They own the entire category. With the U.S. pest control market worth over $20 billion and rats causing billions in property damage every year, the upside here is massive. Now here's where things get exciting. The last 90 days have completely changed the trajectory of this company. First big catalyst, SenesTech went live on Home Depot. With nationwide shipping. Think about this. Home Depot processes over 395 million online transactions every single year. This is more than just sales. This is validation from a Fortune 50 retailer. And if online sales perform well, Home Depot could put SenesTech products into more than 2,300 physical stores across the U.S. That's when revenue can explode. Second catalyst, record-breaking Q3 earnings. Revenue hit $690,000, up 43% year over year. Evolve products exploded 77%. E-commerce grew 55%. Municipal deployments surged 139%. Gross margins hit 62.8%. And they ended Q3 with $11.2 million in cash, giving them a runway through 2027 with zero dilution risk. That's extremely rare for a penny stock. Third catalyst, NYC adoption. After the famous Central Park owl Flacco died from eating a poisoned rat, the NYC City Council passed a bill mandating fertility control. Since then, New York has been actively deploying SenesTech's Evolve products across multiple neighborhoods. When the largest city in America starts using your product, every other city pays attention. This could create a domino effect across the entire country. Fourth catalyst, international deals. SenesTech is currently negotiating pallet and container-sized shipments with Hong Kong, Netherlands, Australia, and New Zealand. These aren't tiny orders, these are potentially country-level distribution agreements. Once regulatory approvals finalize, revenue could double or triple almost overnight. And the fifth catalyst is the big one. On December 13th, H.C. Wainwright, a major Wall Street firm, raised their price target from $3.50 to $10. They didn't just maintain their strong buy. They tripled their target. A $10 target suggests a 376% upside from current levels. Analysts don't raise targets like this unless they seeing something major behind the scenes, likely international approval progress, retail expansion potential, or new municipal contracts. Now let's talk technicals, because the chart is screaming opportunity. SNES has been trading around $2.10 to $2.80. The 52-week range is $1.30 to $9.80. The stock touched $9.80 earlier this year, and now it's sitting almost 80% lower. That's a massive drawdown. Support is rock solid around the $1.90 to $2.10 zone. Every time it dips into that area, buyers show up strong. That's a clear sign of institutional accumulation. First resistance sits at $3.27. If that breaks, momentum will pick up fast. Major resistance is around $4.15, the warrant exercise price. A breakout above $4.50 opens the door to $6.15, and then potentially a much bigger move. RSI is around 37, that's close to oversold. Selling pressure is almost exhausted. Low volume decline plus strong fundamentals is usually a bullish setup. Technically, analysts are also spotting a cup-in handle pattern forming with a triple bottom around $1.47. If the pattern completes, the short-term target is around $2.40, with longer-term potential ranging between $4.50 and $6. The stock also trades below both the 50-day and 200-day moving averages, and historically, when a company with improving fundamentals trades this low, you often see a powerful 50% to 100% mean reversion rally. Now let's break down the risk-reward. We're heading into Q1 2026 municipal budget season. Cities are about to finalize their pest control budgets. NYC could place a massive order. If even 10 to 15 major cities adopt SenesTech products next year, we're talking millions in new revenue. Market cap right now sits between $13 and $20 million, depending on price swings. They have $11.2 million in cash. That means the entire business is being valued at around $2, $9 million, depending on how you calculate it. That's insane for a company growing 77% year over year with zero competition. H.C. Wainwright's $10 price target suggests they believe the company can hit $50, $75 million market cap within 12 to 18 months. That requires around $5 to $7 million in annual revenue. Based on Q3 numbers alone, they're already on a $2.7 million run rate. Of course, we need to talk risk. SenesTech only has 23 employees. Scaling too fast could create operational challenges. Retail adoption is unproven. Will homeowners pay $30, $40 for fertility control instead of buying a $5 trap? They're still losing money. Dilution is possible in 2027 if growth doesn't accelerate. Competition could emerge in future years, though regulatory barriers make that difficult. And this stock is highly volatile. 15 to 25% swings in a single day are common. Bottom line, this is high risk, high reward. If you can't handle volatility, it's not for you. But if you're willing to take a calculated asymmetric bet risking $1 to potentially make $3, $10, this might be one of the most interesting setups going into 2026. There you have it, the full breakdown on SNES, SenesTech. A $2.10 penny stock trading near 52-week lows, down 65% from highs, with huge catalysts: Home Depot distribution, record revenue growth, NYC contracts, global expansion, $11.2 million cash on hand, and a $10 analyst price target. Now I want to hear from you. Do you think SNES can hit $10 in 2026? Are you buying, holding, watching, or staying away? Drop your thoughts in the comments right now. And if this deep dive helped you discover a new opportunity, smash that like button. Let's hit 500 likes on this video. Your support means everything. If you want more penny stock breakdowns with real research and no BS, hit subscribe and turn on notifications. I drop videos like this every week. This video is not financial advice. I am not a financial advisor. Always do your own research. Penny stocks are extremely risky. Only invest what you can afford to lose. This is for entertainment and educational purposes only. Thanks for watching. Stay disciplined, trade smart, and I'll catch you in the next one. Peace.